Welcome to another deep dive. This time, we're going to plunge headfirst into the world of private equity.
Oh, exciting.
You know, those billion-dollar deals and high-stakes risks and those larger-than-life personalities.
Definitely larger than life.
Our guide for this deep dive is The New Tycoons by Jason Kelly. We've got excerpts ready to dissect.
Okay.
So what's really fascinating to me is that we hear about private equity all the time,
Yeah, in the news.
but we very rarely get a glimpse of what's going on behind the scenes.
Right.
And I think this book does a great job of giving us a front row seat to how these firms actually operate.
It does. It really pulls back the curtain on how they work, their influence on businesses, and the people who are really driving this whole industry.
It's like we're private equity detectives kind of uncovering the secrets, figuring out the motives, and seeing how it all impacts the world.
Exactly. We'll be looking at their strategies, how they're connected to companies, like Dollar General or Domino's Pizza, and we'll even get into some of the ethical questions surrounding how they do business.
I love it. I love it. Okay, so first things first, how did this all even get started?
Well, back in the 1970s, it was all about, bootstrapping and leveraged buyouts. It was a pretty humble beginning compared to the trillion-dollar industry that it is today.
That's right. And when we think about that rise, there's some really big names that come to mind.
Oh, yeah.
We're talking Kohlberg, Kravis Roberts, Blackstone, Carlyle, Texas Pacific Group, all these names that are now synonymous with private equity.
Absolutely. What's interesting is the shift, I think, from, what we could call financial engineering using leverage and creative balance sheet work to an emphasis on operational expertise.
So they're not just moving numbers around on a spreadsheet.
Not anymore. They're really focusing on actually changing the businesses that they're acquiring.
That's fascinating. Okay, so hold on a second. Where does all this money come from? We're talking billions of dollars here. It's
Yeah.
not like Scrooge McDuck diving into a vault of gold coins.
Yeah. Haha, right. Although that would be fun to see. No, it's more like a giant pool of money from these big institutions called limited partners.
Limited partners, okay?
Right. And we're talking about pension funds, university endowments, and even wealthy individuals who are all looking for those big returns that private equity promises.
It's almost like a giant high-stakes investment club.
In a way, it is. Think about it. Pensions need to make big wins to ensure those retirement checks keep flowing, right?
For sure, for sure. I'm thinking about the Oregon Public Employees Retirement Fund. They partnered with Blackstone.
Yes. They handed over $200 million for a 10-year period, agreeing to a $3 million yearly management fee.
Oh, that's a lot of money riding on a potential, hopefully massive payoff.
It is, but it really illustrates how these partnerships work and what motivates these investors to get involved.
So as the industry has grown, it's become clear that it's not just about those quick financial gains anymore.
Right. It's not enough to just buy a company and flip it for a profit.
They have to roll up their sleeves and actually run these companies, not just play with numbers on a spreadsheet.
Exactly. That's where the ops come in. These are the operational experts working alongside the financial people.
Ops, okay.
They are focused on improving how these acquired companies actually perform.
Interesting. Are there people who embody this, like specific examples?
Oh, absolutely. Deb Conklin, for example, she's a field operations expert at TPG.
Okay.
She's worked with companies like Hilux Poly and Caesars, and her focus is on making things more efficient and profitable using methods like lean manufacturing.
Lean manufacturing, what is that?
Basically, streamlining every process to eliminate waste and increase output.
So it's like a Marie Kondo approach to business.
Exactly. Get rid of what doesn't spark joy, I guess. But in this case, it's about eliminating anything that's not contributing to the bottom line.
It sounds like they're moving from number crunchers to more like business makeover experts.
It's quite a shift, and it signifies a real change in how they view these companies.
So with all these different businesses under their control, they've essentially become these massive conglomerates.
They have. Take Blackstone, for instance. They use programs like Core Trust, which allows them to buy things in bulk for all the companies they own, and Equity Healthcare, which streamlines medical benefits across their entire portfolio.
Whoa, wait, so they're getting bulk discounts on everything? That's incredible.
It really is. It shows how they've evolved from just being individual deal makers to becoming these strategic overseers of these massive economic networks.
It's like having a superpower in the business world, just getting bulk discounts on everything.
It does give them an advantage, and it all ties back to their evolution and how they think about their role.
Speaking of strategic overseers, I think it's time we talk about Steve Schwartzman and the rise of Blackstone itself.
All right, let's dive into that.
Because Blackstone is one of those names that you just hear everywhere.
It is. Schwartzman, he's driven by this ambition to make Blackstone a global force, and he's pushed them beyond private equity into real estate, credit, and even hedge funds.
So they're like the investment world's Swiss Army knife. They can do it all.
Uh-huh. That's a great way to put it. They're not afraid to diversify and explore new avenues for growth.
But there's also that element of controversy that surrounds them.
Oh, definitely.
I mean, his 60th birthday party, the one held at the Park Avenue Armory, it became this symbol of excess and opulence.
It did. It sparked a big debate about, well, about the industry itself and its tendency towards extravagance.
It was definitely a party that people are still talking about.
It was. And it really raises interesting questions about public perception, the image that private equity projects, and that fine line between success and, well, going overboard.
So we got these massive players like Blackstone. But what about everyone else? Is it all just mega corporations, or are there smaller players in this game?
That's where the barbell theory comes into play.
Okay, barbell theory.
It suggests that the future of private equity will be shaped by these huge diversified firms at one end and smaller, more specialized firms on the other.
So it's like the ecosystem is evolving with giants and specialists all trying to find their place.
That's a good way to think about it. But this high-stakes world of finance, it's not without its critics.
Yeah, sure.
There's increasing scrutiny and criticism about the impact that private equity has on jobs, on the economy, and even how it's taxed.
The carried interest debate,
Mm.
that 20% profit share that private equity managers get, that certainly caused a lot of controversy.
It has. Lawmakers and the public are questioning whether it's truly fair, while supporters argue that it incentivizes investment and risk-taking.
And of course, labor unions have also been very vocal in this conversation.
Right. Organizations like the AFL-CIO and the Teamsters are advocating for worker rights and pushing for more responsible practices by these firms. It's definitely a very complex issue with, arguments on both sides.
And I think as these firms become more influential, that question of transparency and accountability becomes even more important.
Absolutely.
So let's unpack some of those criticisms a little bit more. What about the impact on jobs? Because that seems to be a major concern for a lot of people.
It is. A lot of critics argue that private equity prioritizes profits over jobs, which can lead to, well, job losses and factories closing down.
But wouldn't their defenders say that they're just trying to make businesses more efficient, more competitive?
They would. They'd argue that by restructuring and streamlining operations, you're ultimately going to see long-term growth and the creation of new jobs further down the line.
It's kind of a short-term pain, long-term gain argument.
It is, and I think the case of Dade International, which was acquired by Bain Capital back in 1994, is a good illustration of this tension.
Oh, tell me more about that.
Well, initially, Bain came in and revitalized the company. Things were looking up.
Oh.
But later on, they extracted a $242 million dividend, which some argue contributed to Dade eventually going bankrupt.
Wow, that's a pretty dramatic turnaround.
It is, and it shows that it's not always a straightforward success story with these private equity deals.
Yeah. Okay, so what about this whole carried interest issue? It seems like that's a real sticking point for people.
It really is, and it gets to the heart of how we view wealth and fairness in society.
Because it is a significant source of wealth for those private equity managers.
It is, and the fact that it's taxed at the lower capital gains rate instead of as regular income has caused a lot of controversy.
Yeah, I can see why that would rub some people the wrong way.
Right, because opponents see it as this unfair advantage, while supporters argue that it encourages investment and risk-taking, so it's a very nuanced debate.
And then you have labor unions, like the AFL-CIO and the Teamsters. They're also playing a very active role in this whole conversation.
They are. They're advocating for worker rights and trying to ensure that workers aren't being left behind in these private equity deals.
So they're kind of acting as a watchdog, making sure that things are done fairly.
Exactly. They're pushing for greater transparency. They want workers to have a voice in the decision-making process, and they want safeguards to prevent job losses.
So it's not just about those shareholder profits. It's about taking care of the people who are actually making these businesses run.
Absolutely. And I think Andy Stern, the former president of the Service Employees International Union, has been a very vocal critic of private equity.
Oh, really?
He argues that their focus on short-term profits can really harm workers and communities.
So he's probably seen the negative side of these deals firsthand.
He has, but he's also acknowledged that private equity can have a positive impact on economic growth. So it's really about finding that balance, finding that common ground between labor and private equity.
It does seem like finding that middle ground is really crucial.
It is.
What about this trend of private equity firms going public?
Oh, that's interesting, isn't it?
It is, because it adds this whole other layer of complexity.
It does, because going public raises questions about potential conflicts of interest,
Conflicts of interest, okay?
right, between those public shareholders and the limited partners who originally funded the firm's activities.
So they have to balance keeping the market happy while also fulfilling their obligations to their original investors.
Exactly. And there are concerns that going public could lead to a focus on short-term profits just to boost those stock prices, potentially at the expense of long-term value creation.
It does sound like a recipe for some tough decisions.
It does. It really highlights the need for strong corporate governance and transparency in decision-making within these private equity firms.
So as we've been discussing, there's a lot of controversy surrounding private equity, but let's step back for a second and talk about their operational expertise, because it does seem like that's a key part of their success beyond just the financial stuff.
It is. It's about actually improving those businesses that they acquire.
Right, going beyond just buying low and selling high.
Exactly. It's about rolling up their sleeves and getting involved in those day-to-day operations.
And I know we talked about Deb Conklin before, but are there any other examples of this kind of hands-on approach?
Oh, there are. TPG, they have a strong belief in leveraging the power of conglomerates, applying best practices across their diverse portfolio.
Okay.
For example, they implemented programs like Core Trust, which is for centralized purchasing,
Okay.
and Equity Healthcare, which streamlines medical benefits across all their holdings.
So they're using their size to get better deals and create efficiencies.
Exactly. And it really demonstrates that strategic advantage that comes with scale, their
Okay.
ability to optimize operations across multiple businesses.
Okay, so TPG is doing this, but what about other firms? Are they all embracing this hands-on approach as well?
They are, absolutely. KKR has a unit called Capstone, which embodies a very similar philosophy.
Capstone, okay.
Yeah, it's led by George Roberts, and they focus specifically on improving operational performance in their portfolio companies.
So they're not just coming in and dictating terms, it's more of a collaborative process.
Exactly. It's about working together to identify areas for improvement, implementing best practices, and really collaborating with the management teams to get results.
And are there any specific examples where this approach has really led to success?
Oh, absolutely. The case of Dollar General, which was acquired by KKR in 2008, is a great example.
Okay, Dollar General, I know that one. What did they do?
Well, Rick Drayling, he was the CEO of Dollar General at the time, and he spearheaded this remarkable turnaround under KKR's ownership.
A turnaround, so things weren't going so well at first.
They weren't, but they really focused on those operational improvements, streamlined their processes, and made the shopping experience better for their customers.
So it was a combination of both internal improvements and focusing on what the customer actually wanted.
Right, and the results were really impressive. Their sales soared, their profitability went up, and Dollar General actually went public in 2009, which is a real testament to the potential of private equity to revitalize a business.
That's quite a turnaround story.
It is.
So it's not just about cutting costs and making things more efficient. Is there a role for innovation and growth within this operational expertise as well?
There is, and I think Bain Capital's investment in Domino's Pizza is a great example.
Domino's, the pizza chain.
Yes. They worked very closely with the management team to revamp the menu, improve their operations, and expand globally.
So it wasn't just about making the existing business run better, it was about transforming it completely.
Exactly. And Domino's market capitalization skyrocketed to $2.4 billion.
Wow.
It just shows how powerful it can be when you combine strategic vision with operational excellence.
It seems like these private equity firms are constantly looking for new ways to leverage their expertise.
They are. They're always looking for an edge.
And how are they doing that?
Well, they're building internal teams of operational specialists, they're partnering with industry veterans, and they're investing heavily in technology to stay ahead of the curve.
So it's a constantly evolving field. They have to adapt to stay competitive.
Absolutely. And this focus on operational expertise really marks a kind of maturation of the industry. It shows a recognition that long-term success requires more than just financial smarts. You need that operational know-how as well.
So they're moving from being purely financial players to more holistic business partners, which is a pretty big shift.
It is a big shift.
So we've talked a lot about the firms themselves, but what about the people behind them? Who are some of the key players driving these billion-dollar deals?
Right, because their stories can give us a glimpse into the personalities, the ambitions, and the motivations that make this world so fascinating.
Okay, so who should we start with?
Well, let's start with Steve Schwartzman, the co-founder of Blackstone.
Ah, the man behind that legendary birthday party.
That's him. And his journey is a really interesting one. It's a tale of ambition, strategic brilliance, and a relentless pursuit of excellence.
He clearly has a knack for making big things happen.
He does. He was the one who pushed Blackstone to expand beyond just private equity into real estate, credit, and hedge funds, creating this truly diversified powerhouse.
But as we talked about earlier, his path hasn't been without its fair share of controversy.
No, it hasn't. That lavish 60th birthday party drew a lot of criticism and became a symbol of, well, the excesses that are often associated with the industry.
Right, it kind of fueled that debate about wealth inequality and the responsibilities that come with that level of financial success.
It did.
Okay, so we've talked about Steve Schwartzman. Who else should we know about?
Well, let's shift our focus to Henry Kravis and George Roberts, the cousins who founded KKR.
KKR, another one of those names that everyone seems to know.
They are, and their partnership is a real testament to the power of shared values, a deep understanding of business, and a drive to succeed.
So what sets them apart? What's their secret sauce?
Their investment philosophy really emphasizes operational improvements, creating long-term value, and building strong relationships.
So it's a more collaborative approach, focusing on win-win scenarios.
Precisely. And they've had a huge influence on how the industry has evolved. Their impact goes far beyond just KKR itself.
So they're not just deal makers, they're kind of thought leaders in this world.
Yeah.
Okay, so we've got Schwartzman, we've got Kravis and Roberts. Who else is shaping the landscape of private equity?
Well, let's meet David Bonderman and Jim Coulter, the duo behind TPG.
TPG, another major player. What makes them unique?
Their partnership is a real study in contrasts.
Contrast, okay.
Right, Bonderman is known as the flamboyant risk taker, while Coulter is the analytical strategist.
So it's like the perfect blend of daring and careful planning.
Exactly. Bonderman's entrepreneurial spirit and Coulter's sharp intellect have been key to their success.
And what kind of companies do they invest in?
TPG's investments are all over the place, from airlines to technology to retail.
Okay, so they're not afraid to think outside the box.
Not at all. And their success really underscores the power of collaboration and leveraging those different strengths.
It's like the Avengers of the investment world.
Uh-huh. I like that. But these are just a few of the many talented people who are shaping the private equity landscape.
Right, because it's not just faceless corporations, it's individuals with their own unique perspectives and motivations.
It is, and understanding these individuals is crucial to really grasping the complexities and nuances of this field.
Okay, so we've explored the history, the mechanics, the controversies, and the personalities behind private equity, but what about the bigger picture? How does all of this impact the world beyond Wall Street?
Right, because private equity's influence goes way beyond just finance.
In what ways?
Well, for one, it's driving innovation and technological advancement.
Oh, how so?
By investing in emerging companies and supporting groundbreaking ideas, they've really fueled the growth of tons of industries.
So they're just buying existing businesses, they're actively fostering the creation of new ones.
Exactly. And take the technology sector, for example. Private equity firms played a huge role in funding the development of things like the internet and mobile devices.
So they're shaping how we live and interact with the world.
They are. Their investments have helped companies like Google, Facebook, and Amazon become the global giants that they are today.
Wow, that's quite a track record.
It is. But their influence extends beyond just tech. Their impact on healthcare has also been huge.
In what ways?
Well, they've supported the development of new drugs, medical devices, and new ways of delivering healthcare.
Okay, so they're helping bring life-saving treatments to market and improve patient care.
They are, but their involvement has also driven consolidation and efficiency within the healthcare industry, which has its pros and cons.
Right, so it's not all positive.
It's a mixed bag.
And what about retail? What impact have they had there?
Well, their investments have transformed traditional brick-and-mortar stores into more omni-channel experiences, allowing companies to adapt to online shopping and meet those evolving customer needs.
So they're helping businesses stay relevant in a world that's changing so rapidly.
Exactly. And they've also driven innovation in areas like supply chain management and customer relationship management, so they're really impacting businesses on all levels.
So it's clear that private equity has this incredible transformative power. But as we mentioned earlier, it's not without its critics.
Right, and a lot of those critics are worried about the impact that this focus on profit has on social responsibility.
So there's this concern that the pursuit of profit can sometimes overshadow the human cost.
Exactly. And those concerns are especially relevant in industries like manufacturing, retail, and healthcare, where private equity involvement has been really significant.
So it's a very complex issue with valid points on both sides.
It is, and the debate over private equity's societal impact is only going to continue as the industry grows and its influence expands.
So it sounds like finding that balance between financial success and social responsibility is really crucial.
It is, and more private equity firms are recognizing the importance of ESG, which stands for environmental, social, and governance, and incorporating those factors into their investment decisions.
So they're looking beyond just the bottom line and considering the broader impact of their investments.
Precisely. They're developing ways to measure their environmental impact, how they treat their employees, and their corporate governance practices.
So it's all about moving towards a more sustainable and responsible approach to investing. And
Exact.
what's driving this shift?
Well, it's a combination of things. There's investor demand, regulatory pressure, and a growing recognition that long-term value creation is important.
It does seem like the industry is starting to realize that doing good can actually be good for business.
It can be. And this evolution towards a more responsible approach is likely to really shape the future of private equity.
So what does the future hold for private equity? How is this industry evolving to meet those challenges and seize new opportunities?
That's the big question, isn't it?
That is.
And the industry is constantly adapting to the changing market conditions, those new technologies, and those evolving investor expectations.
So they have to stay nimble and innovative to stay ahead.
They do, and one trend that's emerging is the rise of specialized funds focusing on niche sectors like technology, healthcare, or energy.
Okay, so they're becoming experts in specific areas.
Right, and they're attracting top talent and driving innovation in those respective fields.
And what about technology? Is that playing a role in the evolution of private equity?
It is a big one. Private equity firms are using data analytics and technology to make better decisions.
Okay, in what ways?
While they're using data to improve their due diligence processes, to find new investment opportunities, and to keep track of how their portfolio companies are doing.
So they're embracing the power of big data.
They are. They're investing in sophisticated software and hiring data scientists to gain a competitive edge.
It sounds like they're becoming as tech savvy as the companies they're investing in.
Absolutely. And as we discussed earlier, the industry is also embracing responsible investing, incorporating those ESG factors into their decisions.
Right, trying to make a positive impact on the world while also generating those returns.
Exactly. And this shift towards sustainability is really being driven by investor demand, regulatory pressure, and that growing recognition that long-term value creation is crucial.
It's definitely encouraging to see this shift toward a more sustainable and responsible approach.
It is, and these trends are really reshaping the private equity landscape, creating new opportunities, attracting new talent, and raising the bar for performance and responsibility.
So as we wrap up our deep dive into the world of private equity, it's clear that this is an industry that's constantly in motion,
It is. It never stands still.
and its impact on the global economy is undeniable.
It is, and its future is really going to be determined by its ability to adapt to change and to embrace those responsible practices.
Absolutely, and I think our listeners are now much better equipped to understand this complex and fascinating field.
I hope so, because behind every deal, every investment, every decision, there's a whole network of factors at play.
And by understanding the mechanics, the motivations, and the implications of private equity, we can gain a much deeper appreciation for its role in shaping our world.
We can.
Now, before we go, you mentioned earlier that you'd give us a concise summary of the key takeaways from our deep dive.
Oh, I did, didn't I?
You did, and I think our listeners would really appreciate that. It's like a cheat sheet for understanding the world of private equity.
All right, a cheat sheet it is. So if you want to understand private equity, here are the 10 things you absolutely need to know.
Okay, give us those 10 key insights.
Okay, well, first, you got to understand its evolution, from those early leveraged buyouts to this massive industry that uses all sorts of different strategies.
He's come a long way.
It really has. Second, remember where the money comes from. Those pension funds, university endowments, wealthy individuals, they're all chasing those big returns.
They are drawn to the promise of those high profits.
Exactly. And third, don't forget about the ops, those operational experts. They're the ones who are really making a difference inside those businesses.
They're the unsung heroes in a lot of ways.
They are. And fourth, think about those big firms, those giants like Blackstone. They're essentially operating like conglomerates, using their size to their advantage.
It's all about that leverage, right?
It is. And fifth, you've got Blackstone, Led by Steve Schwartzman, they're a prime example of that diversification, pushing beyond just those traditional private equity deals.
Always looking for new opportunities.
Always. Sixth, keep in mind the barbell theory. That idea that the future will have those huge diversified firms and those smaller, more specialized firms all coexisting.
So it's not just one size fits all anymore?
Nope. Seventh, you have to acknowledge all the scrutiny, those concerns about job losses, the impact on communities, and how they're taxed, especially that carried interest debate.
Right. There are a lot of valid questions being raised about their practices.
There are. And eighth, you got to recognize the role of labor unions. They're the ones pushing for worker rights and trying to ensure that private equity behaves responsibly.
They're holding them accountable.
Exactly. Ninth, we talked about those private equity firms going public, and that raises concerns about conflicts of interest and the need for transparency.
It's a whole new set of challenges.
It is. And finally, our 10th point, it really sums it all up. The future of private equity depends on finding that balance between making money and having a positive impact on society.
Because at the end of the day, it's not just about profits, it's about people.
Exactly. So there you have it, 10 key insights to help you understand this complex and fascinating world.
Our private equity cheat sheet. Well, this has been a truly illuminating deep dive. Thanks for guiding us through it.
It's been my pleasure. Always happy to explore this world with you.
And to our listeners, until next time, keep exploring, keep questioning, and stay curious about the forces shaping our world. Dive deep.